Good morning. I am going to walk through a model of what I will refer to as Z for vascular anomalies. And this is being developed by Relay Therapeutics. This one's going to be a little different than what I usually do because Relay, they do a really good job breaking down the market opportunity and presenting it in an honest manner. And they even referenced it during their earnings call that they did yesterday. So we have a lot of good information to go off of. Now, let me pull up the press release. So this is a phase 2 study. And it looks like it's really an open label, which is understandable for phase 2. And then, this is really considered a rare disorder that is severe cases. Actually, vascular anomalies are very common, but they aren't often symptomatic. As you can see in this case, this is a very obvious example of a symptomatic vascular anomaly. So basically what Relay is trying to do is they're trying to develop a more specific therapy for this condition. There is a systemic therapy already approved for parts of this market, but they're trying to differentiate Z on efficacy and safety. So you can see that that's more of an older asset there. Yeah, efficacy, tolerability, trying to prevent grade 3 events. All right, so let's get into modeling. Maybe you've lost track, but it's 2026. It's a phase 2 drug, and Relay isn't known for commercializing drugs. So an 11.5 discount rate is pretty standard, and then tax rate is set at 21. Probability of success, it's a refined MOA, but it's not entirely new for this indication. So POS is going to be higher than what I typically put for a phase 2 asset. Let's see. This is yeah, it's kind of doesn't really fit in well with just one indication, does it? Well, let me see when they intend to advance this. Okay. Just trying to see what their next plans are in this indication. Yeah, it's still, these are not final phase 2 results. So that does impact probability of success. Yeah, a lot of these videos that I do are really me doing all this from scratch. I had some familiarity with Relay going in, and with this indication as well. But this is really me going at it. This is really a rough draft of how I go about things and how I come to my assumptions and how everything comes together. I guess I can do by... I'm pretty sure this is a small molecule. Let me just double check, so I don't want to make a dumb mistake here. We can be pretty comfortable with assuming that this is going to move cleanly into a registration enabling trial. I'm going to go with 60. All right, let me go back to the transcript because management broke things. I know that they broke things down here. They list the TAM. That's probably the top of the funnel, which I'm going to get into later on. This is a realistic estimate right here. So it's good that Relay isn't a company that exaggerates their opportunity. This might be gross price. I model for net price. Launch of say 2029. Usually with peak I'll go with 6 or 7 years after launch, but this is it's a more rare condition, and if someone is needing of a systemic treatment for vascular anomalies, they're going to get it pretty quickly. So I'm gonna say it peaks in about 5 years. LOE. I'm referencing a 10K. They're saying 2042, which is usually that's where the LOE falls around. Present day. Generic tail. This is basically what the drug can do after it loses exclusivity. So, when drugs lose exclusivity, a couple things happen. The market share drops and the price drops. I usually put this at 5 years. I will go longer for biologics because those are usually stickier. But there's no reason to be aggressive beyond 5 years for this one. Target population. This is where the company does a pretty good job at laying this out. So they're saying 25,000 US patients seeking systemic therapy. That's the initial clinical focus, at least. I really gotta find this this clinical trial. Yeah, so this is what I'm going to model. with acknowledging that there's a future opportunity to expand this market. These conditions are lower hanging fruits than this one. I imagine this one's more difficult to treat, and it lacks current systemic therapies. Okay, so I'm gonna go with 25,000. I think that's a pretty reasonable probably lands in the middle of the funnel. That's a pretty reasonable assumption. Looks like they have 100% ownership split. Now this, I just added this. It's more relevant for oncology though, for your conventional oncology, which I guess that might be the most relevant indication that I can use for this would be oncology. And of course it's practically between phases 2 and 3. But again, we already know that this MOA works in this condition. So 60%, I still feel safe with that. But yeah, going back, this is more for conventional oncology. And there it is. Because when I model for conventional oncology, I'm looking really at annual incidence. So those are new patients that are seeking treatment. With this condition, with the vascular anomalies, these are patients that are just existing in the market. So they're coming and going with age. So I don't have to change anything with this. But if this was conventional oncology, let's say if the annual incidence was 1,000, for example. But the thing is that the duration of therapy. What if it was 2 or 3 years? It wouldn't be accurate if you just put a target population of the annual incidence, because that there's patients that are still taking a drug a year ago, that came on board a year ago, that are still taking the drug. But this isn't relevant for this. I do usually model for some population growth. Not as relevant here because this impacts a lot of kids as well, so it's not like people are getting older and kind of growing into these like chronic diseases. It's really more relevant for chronic diseases. But yeah, I'll just keep it at 1. It's a very unimportant input, so I don't like to spend a lot of time on it, even though I have just now. So peak share, yeah, I mean there's a lot of different ways that patients can go about treating these conditions. But I suspect that a systemic therapy would be pretty popular. let's see what Relay. Maybe there's some information on what this drug does. Which would give us a pretty good idea of okay. Wow. They really don't break this out, huh? What is this one? These aren't drugs that I see a lot in practice. Oh yeah, that's for breast cancer then. Yeah. Okay. Interesting. Okay. So they got this approved. I don't know if it says it there. Okay. They don't really break it out. But I wonder if this is yeah, so I mean this. Okay. So this was originally approved on accelerated approval, so that tells me that Relay can take the same path. I wonder if it's received full approval. Okay, I don't think so. It's not surprising. These companies, they take their time. They take their time when it comes to confirmatory trials. You know, this is probably the biggest opportunity. You know, these are going to be the patients that really want a systemic therapy, that are more symptomatic and desperate for something. So, you know, certainly this has the potential for blockbuster opportunity, but it might not play out as cleanly in the real world. Granted, prescribers might not be impressed with the efficacy, or they might not like the tolerability, and you know, having a more attractive drug might expand the market. But is this going to go away just because Relay comes to the market? It looks better, but I can hardly even read any of this. So, you know, and obviously peak share is another important assumption that you would do a sensitivity analysis for, that you would isolate. I'm okay with modeling for a market leader. I think people misunderstand peak share a lot. Because they don't see 20% as high, but if you have 20% peak share, you're basically a market leader. Like peak share never hardly ever gets to like 60 or 70 or 50%. If you're at 20%, you're a market leader. So I hardly go over 35% peak share. 20% peak share, you're facing competition from this other drug and from other treatments like surgery. So it seems like it's pretty reasonable. Year one uptake, not very important, but I would say the uptake would probably be pretty good. I'm re-looking at my launch year assumptions, noting that accelerated approval is on the table. But I don't. Let me see if management addresses. Excuse me, their plan. Okay, there we go. So they want to see additional phase 2 data. Obviously, this is also a very important endpoint, the launch year, and there's a lot of uncertainty. It might get accelerated approval, it might not. I don't know that right now. You have to do your best job modeling. It's 2026. It's still in phase 2. They expect more data later this year. I mean, I think 2029 is a pretty legitimate assumption. I mean, it could narrow to 2028, but then it also could expand to 2030 feasibly. But this is also something I can isolate and provide a sensitivity analysis for. This isn't relevant. This one's for drugs that have already been commercialized. Pre-launch R&D, obviously companies don't break this out on a drug basis, but it helps to get an idea of what they're doing, and of course it's not listed there, so let me check their 10Q then. Yeah, they spend a lot of money on R&D, so it's going to come out to, and it's probably going to increase from here. So 7 times 4, it's going to come out to like 300 million a year. But of course, I know Relay they have a bunch of stuff going on. Let me just double check their pipeline. It's right here. So, they're looking into breast cancer. Gosh, that's their pipeline. That's it? Okay. That's interesting. Wow. It's a lot of R&D for this. But yeah, this gives us a good idea that this trial is costly. It's not going to be as costly as a breast cancer program, for sure. So, let's say about close to 30% or a quarter of their pre-launch R&D is going into this vascular anomaly indication. NOL doesn't really have much impact on the final valuation. So if a company has been around for a long time, and then I kind of put in a placeholder there. Obviously, it's not as simple as accumulated deficit, but wow, $2.1 billion. So I'll put $1 billion there, but again, I'm not really worried about that. For a small molecule, I'll usually go 8% COGS. And then, I just added this because just doing 1% for launch OPEX. So basically what the model does is that I can put in launch OPEX percentage and then launch years as well, and it'll show that through the launch duration. Now, yeah, I usually have the launch phase as like 2 or 3 years. You gotta build the sales force. Usually that's going to cost you upwards of 100 million a year to build that sales force, and then steady state OPEX. So that's on the drug level. It's including selling and marketing costs. It's including the R&D that happens after a drug is approved. Which would be higher here because they would have to do a confirmatory trial, but you don't want to penalize them too much because ideally they're running that trial pretty quick, and they're not dragging and spending so much money on that. But anyways, so usually with the steady state OPEX, I'll go like 30 to 35%, which I feel pretty comfortable going with here. Now, I've been doing a lot of models for atopic dermatitis, and a lot of these companies, a lot of these biotechs are developing drugs that are not yet differentiated. They're trying their best to differentiate them with safety or with duration or whatnot. But those are the types of markets that would cost a lot of money to market your drug. So in those cases, the steady state OPEX would be higher. But this, if the efficacy and the tolerability holds up for this drug, this is the type of drug that would sell itself. It wouldn't really require a lot of S&M. For post LOE price drop and share kept, I usually I don't vary much in these estimates. Let's say, just say 50-50. So you can begin to see how this is kind of turning out. It breaks down the number of patients, the share, the phase. This is when it plateaus, but the revenue is still growing, and that's because I put an annual population change of 1%. It applies the initial OPEX. I'm just looking at something here. I probably should include a percentage here as well as a baseline. And then this is really associated with like one-time costs. So these are referring to the baseline steady state OPEX, the recurring costs, and then I'm breaking it down on the fixed cost of building that sales force and the infrastructure. So I think that's where I mess up there. But this looks a lot better. Yeah. So what I'm doing right now is, I put in all my inputs, but, I'm looking at it with things broken down in the table, and I'm thinking to myself, does this look right? Does this make sense? This is the price, which not as realistic, but I have it as stable. I can make adjustments to price, but again, it's such a small variable. I try to keep things as simple as possible. If you get into the nitty gritty of predicting what the price will be every year, which is it's inherently unpredictable. Even the company won't know what their net price is going to be in the next few months because it's always changing. They you know what the gross price is going to be because they set the price, but you never know how net price is going to go. Management estimated $400K, which I assume is gross price, and I can easily double check this as well by looking at the annual price of this existing treatment. Yeah, so that's wholesale acquisition cost there. So yeah, so 350 is should be pretty legit. I don't think there's going to be much variation on that. So this is probably a bull scenario, I would imagine. And then are there any other drugs, next generation drugs that are being developed for this? That's a question as well. That's usually going to be detailed when the company discusses competition in their 10Ks. So right here, there's a couple. This one's more relevant. Let's see what they're actually developing here and how far along they are. Okay. Oh well. Let's see. Right. tabs are really getting long now. Oh. They're busy, huh? Well, I'm not sure they're going to market this in the US. And I don't, from a glance at the data, I don't think it's very differentiated from current treatments or from Relay. This one's topical. Oh. Okay. They just had a press release here. It's really more for cutaneous, which I don't think is as relevant to Relay. Okay. Oh, so they okay, so yeah, they're in a phase 3 trial in the US. they they list it as a second generation drug. That's interesting. Okay. Well, I'm not really compelled to add anything there. In regards to mid-cycle competition, it does cause me, rightly so, it causes me some caution to be more bullish than management. That's not a good sign. That's usually there's something wrong with what I'm modeling. So, they point out that, again, these are the patients that are really going to be seeking treatment or systemic treatment. Let me go back to that presentation too. I gotta go on the low end of this here. Let me pull out my calculator. Oh. Okay. All right. Let me pull out my calculator here. I model conservatively. I know some people hate me for that, but that's what I do. So I'm doing 5 times 0.25. And so 1.25. This is 60 times 0.2. It's going to be lower. That's 12. And then 20 times 15, or sorry, 20 times 0.15 is 3. So 15, 16. So target population, I can probably drop this to 20,000. Yeah, this is more realistic, and really, and the math that I did, I can really drop it, because all the calculations that I did actually come out to 16.25. So I can drop it further. Why not? This is still a pretty optimistic scenario. But it's more defensible. I'm looking at the generic tail, I'm probably being way too I'm probably being way too friendly with my assumptions there, because we all know that drugs they fall off worse than this. This isn't pretty. This isn't pretty bad right here. I'm okay with that. I guess I will end up doing a full pipeline on this for Relay, because it's just really just this indication in breast cancer. So this tells us that this drug and this indication, it's worth 1.17 billion in risk adjusted net present value. And you can see everything broken down here. Now, this is the sensitivity analysis. I usually plug in the ones that I'm least certain about, the variables, especially the ones that can have the most impact on the risk adjusted net present value. And clearly here that is going to be POS, and that's going to be peak share as well. So this is my base case. You could reasonably argue for a higher peak share, and you could reasonably argue for a lower peak share. The same can be said for POS. I really need to improve this, because it keeps it at plus or minus 20% for base. I don't like that. So yeah, I'm always making changes. I'm always trying to improve my models here. It's more relevant when I do the company DCF, not as relevant for drugs, but it gives you a more realistic picture at some possible outcomes here. And then we could do a scenario analysis on this. Or actually, no, because I'd have to enter I really could use a scenario analysis just for drugs, but this requires like corporate assumptions and stuff, so. But this is a good place to end. And I want to see how launch year, if you put everything forward, how it would impact, or if everything goes backwards, how it would impact the funnel valuation. 1.17, it's pretty legit. It's a nice drug to have. Market cap is 2.31. I know they just did a raise. They don't have a lot of debt. Obviously, I think for breast cancer, it's probably going to be a much different story. I imagine that indication is a lot more crowded in regards to systemic therapies than this one is. But that's another time. My voice is actually dying. So yeah, this is Z in vascular anomalies.